Good afternoon. This is Tom Alexander. It is Sunday, September 15th. It is about 3 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend stock market update that I do every week. You can go to alexandertrading.com, click on weekly reports, and you can see this update as well as other updates going back a couple of years. If you find value in this, please like and subscribe. Okay, let's talk about the markets. Next week, we have the latest and greatest exogenous event. We have the Fed meeting. We have, it's highly anticipated the Fed is going to begin lowering interest rates, going to have an interest rate cut. And then we'll have the much anticipated Powell press conference that will begin at about 2:30 on Wednesday. Now, what happens between now and then is just a complete total guess. Let's take a look at the charts. We trade price action, so it's always about the price action. Now, as most of you know by now, and in case you're new, I'll give you a brief description of how I analyze the markets. I view markets through the lens of auction market principles. You cannot deny, it's irrefutable that we are trading auction markets. Auction markets have very distinct characteristics. They have various stages of development, and that's what we use to analyze markets. And we use what has occurred between buyers and sellers as potential support and resistance. If it hasn't occurred, for instance, above the all-time high here, which we're about 0.5% away from, there's no quote-unquote resistance. There's no trade above there. There's no rejection. There's no balance. There's no volume. So while you will get all sorts of magic number projections from Fibonacci extensions and all sorts of trend lines and magic up in here, if we do trade the new all-time highs from an auction market perspective, there is no quote-unquote resistance. Now, at the moment, the only resistance is basically the all-time high. If you look at the chart here, if you look closely, what you see here, you have a lot of volume in here. You have a little volume in here, but we closed on Friday above all this volume in here. So the close was right at the upper extreme of this. So there's really very little left in terms of actual previous market activity that would suggest this is a level that is going to hold this market. Now, it may not, but the fact that we have now been able to claw through all this volume on the horizontal scale here is a net positive. I thought when we were over here, we would spike to a new high. Of course, got the head fake. Now, the important downside level really is this low from the 6th. Last Wednesday, we had a dramatic reversal, and we've been straight up since then. So this is the SPX. The SPX is sort of leading the charge higher, followed by the Dow. Let me find the Dow. The Dow is, gosh, it's about 0.1% from a new all-time high. And then we have the index that has some work to do. It's still about a little less than 6% from an all-time high. And then, of course, the Russell. Now, this is not an all-time high. This is a multi-year high, but we're considerably below that level. Now, the other index that I think is important to keep an eye on is, where is it? The New York Composite. Let me see if I can find it here. I had it up here. Here we go. So this is the broadest of those indices, this and the Russell. This is all the stocks listed on the New York Stock Exchange, and we're less than 1% from an all-time high here. So the message is clear. Short term, there's a lot of upside conviction. Now, there's disparity among the indices as to how close we are to either all-time highs or, in the case of the Russell, important multi-year highs. But we're very, very close. And the 2-3 day conviction that began during Wednesday's trade is very important. We could retrace at any time. We could chop and churn Monday and Tuesday and Wednesday morning as we get closer to the interest rate cut and subsequent press conference. It's really it's hard to know very short term the path this market will take. We can know that last week's Wednesday's low is critical. I would be surprised if we trade below that low, but I wouldn't be all that surprised if we don't trade in back down into this 3-day range prior to launching, assuming we're going to launch on Wednesday because of the interest rate cuts and whatever it is that Powell says. So that remains to be seen. Let's take a look at the technical situation. Now, I use very simple things. Technically, I use NYSE data, specifically advancing declining issues on the NYSE. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And the blue below the histogram is closing market breadth. Now, I'll point out breadth has closed higher, positive, 4 consecutive days. That has the 5-day moving average of advancing issues, as one would expect, about to reach an upper extreme. However, the 10-day moving average is not near an extreme. And if we do launch higher, there's a lot of room for expansion here. So the situation when you're looking at this view, and I show this every week, sometimes it's more valuable than others. Right now, it just sort of is what it is, and we'll see what happens. Everything is going to be affected by this Wednesday report. The market, whatever the market does Monday and Tuesday, actually for the rest of next week, is going to be driven by market participants' perception of what is going to happen, might happen, and ultimately what does happen. Me or anyone else putting magic numbers, magic lines on a chart is immaterial. The market is going to be driven by this event on Wednesday. Now, if we do trade into all-time new highs, we'll take a look at it at that point in time. What we'll want to see how is breadth behaving, are all the indices participating, etc. Now, the last thing I'll leave you with today is VIX. Now, VIX remains elevated. VIX began to become elevated after the high and the drop that occurred subsequent in mid-July, that drop that occurred. And we had this huge dramatic spike up. And since then, we've had, VIX has declined. The most it's declined has been around 14.65, but it's hanging around a much higher level than it was. It tended to hang around for the previous year or so in this bull market rally. So we're testing the all-time highs with a relatively elevated VIX. Something has to give here. Does this mean that this rally isn't real and we're about to crater? It could. Does this mean that there's a lot of fuel for a potential rally and VIX is going to drop below this 14.65 level? It could. I'm sorry, I can't tell you. No one can. The important thing to note is that just be aware. Next week is going to be important because of the market participants are going to be reacting to what they think this number is going to do, and then after the number occurs, the perception or the effect of that interest rate cut and Powell's subsequent testimony. So it's going to be a fascinating, interesting week as usual. Be careful when we have weeks like this of uncertainty. The best advice I can give you is advice I take myself, is to trade very, very lightly and to only, trade the absolute best reward to risk setups that you have identified. You guys enjoy the rest of your weekend. I'll speak with you again soon.